Right, my friends, let's have a look at the hardest 4 MCQs in the March-June 22 exam, according to the PM examiner. And these were the worst answered questions. Okay, let's try and make them a bit more understandable. First question. It was all about this break-even point. He gave you 2 machines. Okay, this wasn't the actual question. This is me explaining it to you. So imagine you got 2 machines that make things for you, machine A and machine B. Machine A, you have to pay 100 fixed costs to use, and machine B 200. So machine B seems more expensive. However, the variable cost per unit that it makes, it costs you £10 to use machine A on every unit, but only £2 on machine B every unit. So hopefully you can see that B has more fixed costs of 100, but in time it will become cheaper because it has less variable costs of 8. Now the question basically said, well, how long before B becomes cheaper? How long before the variable costs, cheapness, whatever that means, adds up to the fixed costs, makes up the extra fixed cost? So how long before B is cheaper overall? Well, if that's the situation, so all you say is, well, more fixed costs then of 100, but B is making less variable costs of 8. So how many individual units, when I save 8 each time, do I need to make before it evens itself up? So it's just that. It's just 100 divided by 8, 12.5 items. After 12.5 items, B will then start being cheaper than A because it's got a cheaper variable cost per unit. Let me explain more. Let me see those 12.5 items now then. So if we did make 12.5 items, they'd both have the same fixed costs. The variable cost, though, for A would be 10 times 12.5, which is 125. But for B would be 2 times 12.5, which is 25. Add them together, and it's 225, because now it's equal. If you make any more above 12.5 items, it will be cheaper to be using machine B, because their variable cost is only 2 per unit. Okay, so a little bit tricky. I've never been shown this before. This was the actual question. So here we have 2 photocopier models, and I'm now doing this from S's point of view. Or am I? Now, yes, from S's point of view, they've got 2,000 more fixed cost. Agreed? However, they are cheaper per copy. So if I take that 2,000 more fixed cost, and they're cheaper by 2 cents every time we make a copy, how many copies is it between the time that we're saving on the variable costs to make up for the fixed costs extra? Just divide one by the other and you get 100,000 items. So at 100,000 items, the cost would be exactly the same. So the 100,001st would be cheaper than using photocopier model S because it's only 3 pence per copy. Okay, you could also do that the way the examiner did it, which was using algebra, but I think it's easier this way. Second question then, all about target costing. Can you remember with target costing, what you do is, first of all, you say, right, what's the market? First of all, you have to develop the product, don't you? So you develop a product, obviously, and then you say, right, what's the market prepared to pay? So you set the selling price. And then once you've worked out what they're prepared to pay, you say, right, what profit margin do I want on that? And only then does the cost kind of come out. That's my target cost then. It's what I want the selling price to be, what I want my profit margin to be, what the external market wants the selling price to be, what I want my profit margin to be, then I can cost the product. And because of that, it might be that, blimey, the costs aren't very much. So I have to identify the cost gap between what the costs are now and what the costs are, what I want them to be. And this was kind of the new bit, really. How do you get rid of that cost gap? Use functional and value analysis. Now, you might or might not have known that. If you'd followed accountancy, you would know that because we had that in the classroom. How can you close the gap? For example, number 1, value analysis. This identifies where you can make small cost reductions once production commences. Functional analysis as well. So that was that. Not too difficult, really, I didn't think, but, it was the worst, one of the 4 worst answers. Let's go into the third question then. I can see why this is done badly, but it is just a case of putting in the figures because you get all these figures here. But then you have to put them into this formula. Now, this formula is given in the exam, so it's just a case of filling it in. Okay, so that formula there is given. Looks horrendous, but let's go through it then. So see this n here. So this n is that 8 there. The sum of xy there is the sum of xy there. So quite straightforward. 8 times 12,475 minus the sum of x times by the sum of y. The sum of x, 89, sum of y, 1063. Put all that together, you get 5193. So far, so good. Then you want the square root of n, which is 8, we know. The sum of x squared, that's given here, look, 1047, minus the sum of x, so you look for the sum of x, 89 to the power of 2. Okay, so that's how you did that. And it's the same thing again. N times the sum of y squared, so n is 8. Sum of y squared is 150251. Then minus the sum of y, 1063 to the power of 2. Put all that in, work it all out. You know, it's ridiculous really, I think. But anyway, do all that. And it came to 0.907. So the question said this correlation coefficient is 0.9 to 1 decimal place. 0.907 to 1 decimal place is 0.9. I agree. And it says because of that, 90% of the variation in factory overheads is explained by. So what they're talking about there is R squared. Okay, and R squared means take your 0.9, take your correlation coefficient, square it, times it by 0.9. That comes to 81%, not 90%. So the second one is not true. Okay, keep going. Fourth and final question was all about this, was all about residual income and return on investment. Let's have a look at residual income first. So residual income is profit before minus interest and tax. So your profits less cost of capital times capital employed. Basically, can your profits beat your cost of capital? And the question says, should it always increase when you beat cost of capital? Well, yes, it should, because that's its point, really. So if I was to tell you that cost of capital was 10%, and your capital employed was 100. So as long as I can beat 10% of 100, then the residual income will go up. So if I actually got 150 or something instead of 10% of 100, then it would go up, and therefore, you know, your residual income will always increase if you can beat cost of capital. So yes. Now, what if I was to tell you that I make £100 return and Apple makes £100 billion return? You can't really compare me and Apple because we are of different sizes, and just using an absolute figure you can't compare. But if I say to you Apple make 40% and I make 36%, because it's a percentage, percentages help you compare different sizes, don't they? But residual income is an absolute figure, not a percentage. It just comes out as an absolute figure. So you can't compare with different sizes. You can only compare different sizes when your performance measure is a percentage. Now, does it improve the more due to the use of carrying value in asset valuation? So what that means is carrying value means it just gets lower and lower and lower and lower because of depreciation. Okay. So in my residual income, it's what returns I get, what profits I get, minus cost of capital times capital employed. So the smaller that is, the better. So if you're using carrying value and that's just getting depreciated down and down and down and down, then your capital employed is going down and down and down and down. So the smaller the better. So yes, residual income does get bigger the more you just carry on using old assets and carry on value them at their carrying value. In the short term, can it conflict with not net present value? Well, let's have a look. So we've got a current residual income of 1,000 minus 10% of 200, which is 20. So the current residual income is 980. Okay. Now, I get a positive net present value project that gives me a positive return of 10 on 800 assets. So now my new residual income will be 1,010 times 10% of 1,000 because I've got 800 new assets. And if you work all that out, it comes to 910. So my residual income would go down even though it's a positive NPV. Okay, so yes, it can conflict. tricky, this question. Hey, you have to really think about it. And then the question got even worse because it said, I don't want you to just do residual income. I also want you to do the same with return on investment. And return on investment is profit before interest and tax divided by capital employed. So if your return on investment is 10% and the cost of capital was 6%, if you got a return of 9%, which is greater than the cost of capital, but lower than your ROI, then your ROI is going to drop if you bring that 9% in, isn't it? So it doesn't always increase when you beat the cost of capital. What about the next one? It facilitates the comparisons of different sizes divisions. Well, it's a percentage, and so therefore, yes, you can compare percentages. You can't compare absolute figures, but you can percentages. Will it improve by using carrying value, by just having assets that are depreciating away? Well, that's the return on investment formula. Capital employed, because it's one divided by the other. We want that to be as small as possible. So again, by just depreciating your assets down, that will become small, and so return on investment would improve. Finally, does it conflict with NPV, or can it conflict with NPV? So let's say our ROI is 10%, and we get a positive NPV project which beats 6%, but only beats it by, say, 2%. So we've got now an 8% return. Well, return on investment is 10%, so we wouldn't accept it because you're not beating the return on investment, even though you are beating cost of capital, which is what NPV does. So yes, there is a conflict there. Okay, so I think that question was really, really tough. You really had to think about that to get that right. But there you go. They are the 4 hardest questions in March 22, according to the PM examiner. I would expect that students of mine could at least get 2, 3, maybe even 4.